I think let's start with a broader sort of financial sector presentation, and we'll get Onfin to come up and do that. Thank you.
Afternoon once again. So I'm coming from the Old Mutual Finance, which is the microfinance division of Old Mutual Group. So this unit mainly focused on financial inclusion, that is trying to reach out to the excluded population or the excluded groups, those people who are not able, especially to get financing from the banks. Most of these people might be farmers. I can say most of them are informal traders. They are informal traders. And like I mentioned, our mandate is to improve access to credit for formal and informal businesses in Zimbabwe. And our products are tailor-made to bridge working capital requirements, and that are designed to address key challenges faced by businesses in accessing credit. And these include restrictive loan requirements and non-flexible repayment terms. As we all know that in order to access a facility, a loan from the bank side, we are supposed to produce a title deed. But how many of us do have those title deeds? Considering the population of Zimbabwe, and we all have answers. And that's where we chip in, where we accept any type of collateral that the individuals have. That's why I mentioned that our main focus is to assist, especially the informal sector. Those, I can say, when it comes to collateral, we are talking of our household assets. We are talking of motor vehicles. We are talking of machineries that we use at our farms. We are talking of livestock. Those are the collateral those are the collateral that we use from the microfinance side. And we also inadequate business and financial management skills. As far as the bank is concerned, the bank requires, I think, the history, the banking history of a client. But as far as we are concerned, we try to help an individual using the limited information that the individual has. And we don't only use the limited data that we have, but we also help that individual going forward to keep those records that will help those individuals maybe to access financial from the bank side in the long run. So we also do financial literacy trainings to our customers, especially those in rural areas. Before we give them a loan facility, we start by doing a financial literacy training in order for them to know what credit is and why we want them to, why it is important for them to keep records. And I can say we have many success stories. Some they've been not banking ever before, but through our engagement with them, they started to bank, and we have some whom we already graduated in order for them to access a loan facility from our bank, which is CABS. And I think there is also issue of lack of access to information on technologies, international linkages, and the export practices. We also engage those who help us, and also when it comes to the market issue, especially when it comes to agribusiness. And I'm glad we are on this platform because for the farmers that we help, their main challenge is the market to sell their produce, whether they are doing maize crop or any other crops that we may think of. The market issue is the most critical issue. And in order for us to be comfortable that this facility is going to serve purpose and is going to help the individual, we also try to help them, try to identify potential buyers for their produce. So what we do, I think, as I mentioned, our products, they are tailor-made financial solutions to individuals and SMEs to support the growth of their businesses. What I can mention is we don't finance startups. We want those individuals who have already started something but want to get somewhere. But in order for them to get somewhere, they don't have the capacity. And that's where we chip in. So our market segmentation, I think we do with the SMEs, mainly in the informal sector. And we also do group lending in the rural areas. SMEs, I think most of them that we are talking about here, they do not bank and they do not have banking history. Some of them, unfortunately, they don't have any record keeping that they have been doing for their past. And we start helping them from the time that we engage them. But what we want are some of the records, like when they do order, where they order, just trying to have something that proves that for the past 6 months they have been doing this business, and also to see the capacity if they are going to be able to be continuing to operate once we give them a facility. So mainly for these SMEs, we help them with record keeping, helping them to open accounts. Since for all our loans, we disperse our funds through a bank account. So we help them to open a bank account. And for some of them, especially those who took facilities for less than 2,000 of value, we do advise them to open an Omari account, which is more convenient for them than the bank side. So that's mainly for the informal traders. And we also have group lending. These are individuals who are in rural areas. These individuals, they do have projects that they are doing. And they do have limited record keeping that they have been doing in the past. That limited record keeping is very important for us because it informs us on their capacity as well. And I can say group lending, we start by doing a week doing a financial literacy training for them to be able to know what is credit and the importance of those credits and why it is important for them to pay back once they took those credits. So mainly these groups in rural areas, and I can say for especially those who are in agribusinesses, we do give them facilities under the group lending, because mainly they do not have because in some instances we require a guarantor. So group, they will be co-guaranteeing each other as a group. And we also advise them why we don't want groups of convenience. So in most cases, they have those groups of mukando, where they've been operating already, giving each other credit. So it will be easy to work with such groups, and we start small with them and growing with them with time. And we also have the payroll and civil servant lending. These are our formerly employed, and also formerly employed either in the government or in the private sector. We do assist them. And also under agribusiness lending, I think we have contract farmers with the secured offtake arrangements. What we mean by that, it is a situation, I think most of these, they are value chains where we have the supplier and the buyer of those produce. So the supplier of the inputs and all the inputs that are needed by the farmer, and also the buyer of the produce, and we will be the financial of such. I can say this model, I think it works really well, considering that mostly we do not disperse these funds to the individuals. We do disperse the funds to the supplier of the inputs. That is, if they are working with any input supplier, we do disperse the funds directly to the what? To the input supplier, so that the farmers will just go and collect the inputs. So there will be no diversion of funds. In most cases, we'll be very sure that the funds are going to work for the purpose for which they took them for. So, and also, I can say in most cases, our input supplier is also the off-taker, and they do provide the agronomist advice to our farmers. They will be on the ground. So contract farmers, we do work with them very much. And also under poultry, we have such, but they are individuals who are doing poultry on a large scale. But unfortunately, in the past, they have been not keeping any records. And they have scaled up through our assistance. So we also do help those. I think this might be a reputation where I just expressed more, but my main focus being on the agriculture value chain borrowers, where we are stating that they might be seasonal, or most of these, and they are smallholder farmers, where we say they are in an irrigation. I think in the past year, we funded crops like garlic and sugar beans in Nyanga, and garlic, some in Shirezi. So there were smallholder farmers in their numbers that we put together, and we worked with the off-taker, and most of these value chains, I think they have been performing very well. as compared to those individuals that we do fund. The market part usually is the challenge. And also on value chain, there is limited side marketing that might likely happen. So I think it is a very good model that we usually use for agribusiness. And also we have the livestock under value chain where we do work with the farmers who are in livestock production. Some of them are like the dairy farmers. For last year, we dealt with the Agriculture Partnership Trust under the guidance of Rodney, and we assisted some farmers from Zaraban Bay, and they are performing very well. So I think so for our agribusiness products, I think they are tailor-made, and the repayments, we align them with the crops that the farmers will be doing, or any project that the farmers will be doing. Like for poultry, most of them, because they will be having like 3 batches, and we give grace periods like the one that we are working with at the moment. We give a grace period on 2 months, and the facility will be for 6 months in most cases that she's taking the grace period for 2 months, and after every 2 months she's paying an installment towards a loan. And for let's say potatoes, we all know that in 4 months time potatoes will be ready for market. So in most cases we have also our agronomists who advise us, especially when it comes to the tenure of our loans. So let's say for potatoes, in 4 months time the crop will be ready for market, and we give the 50 months for selling, and we expect that those funds to be paid on the 60th month. And this will be all aligned to the client's needs. Here, the loan amounts range, of course, it is mentioned 200 to 5,000, but we are not limited to that, because it all depends with the farmers that we are working with. For smallholder farmers, of course, mainly they will be having half hectares or 1 hectare. So the inputs won't be much to get to 5,000. But for individuals that are doing their business on a large scale, especially those of poultry, they are taking bigger amounts. So our strategic priority under agribusiness are smallholder farmers and agro value chain actors. These are our main targets. And also we have we maximize where there is high demand for seasonal and input financing. That is like now we have those who are looking for inputs for their wheat production. So we'll be trying to target those farmers. We do have farmers in before Minerva there, and we have one in Karoi that are doing wheat. Those are some of the farmers that we dealt with. And also in doing all this, we'll be trying to drive food security and rural economic growth. I think so. I think the pictures here. This is one of our clients who is doing poultry production, and she does batches of 5,000. And now she's now doing batches. She started at 2,000, but with the time she scaled up, and she's now doing 8,000. So we do fund for input loans, livestock financing, equipment and irrigation financing, value chain financing, and we also now doing bridging financing for farmers, especially those in tobacco farming. We realized that most of these farmers they do have good crops in their fields, but when it comes to harvesting, they do not have funds for labor, so that their crop goes bad in the stew before harvest, and the quality of that tobacco will be very poor, and which means what they will get out of it will also be what? Reduced. So we are partnering with some of the companies who are in tobacco value chain. I think for this year we have partnered with companies like Atlas and Premier Leaf Tobacco. So we only help those farmers who are under contract farming, not those who are independent. So if we are funding them labor, it's not even much. These farmers, they'll be requesting amounts like 250 to 1,000, not that much. So, but it is helping them very much because what they are going to produce is high quality. So agribusiness risk management, I think when it comes to the weather risk, we have the crop insurance through our insurance companies. And when it comes to market risk, that's why I mentioned about contract farming, where we have the off-taker agreements, where we are very sure that the farmers are going to get the market for whatever that they are going to produce. And the operational risk, we have monitoring and extension support, like I mentioned, that the agronomists will be on ground. And in most cases, these agronomists, they also do help us, especially when it comes to advising on amounts that we are supposed to give these farmers. Because most of them, they will be just stating, I need 2,000, as compared to what they want to fulfill with those funds. Maybe the purpose will be aligned to a less amount, say 1,000. So the agronomists, they do help us very much. Diversification across crops and regions. Like I mentioned, we do a lot of crops we are saving in our markets. And when it comes to regions, we are, I can say, across Zimbabwe, because in Gokwe there, we also do sometimes dryland farming, though it's very risky. But we have attachment with those farmers because at some point we did help them, and we had some of the success stories. So we just continue trying to help them. I thank you.
Thank you, Cornelius. Are there any questions for Omfin? Esther?
Your experience is to fix the loan amounts from 200 to 1,000. What is the interest rate? Can you explain a little bit more?
Okay, thank you. So when it comes to our pricing, our interest rates for all agribusiness loans are at 6% a month. Policies balance. and the tenure, like I highlighted. But also, like I mentioned, this proxy will be insured. But for insurance, part you get guidance from the insurance company. But our price is 6% per month.
Okay, so I forgot the way that we try to do this is to pass the mic around so that people online can hear the question. So if you would like to ask a question, Tony will bring the mic to you.
Just carrying on from the interest rate question, does that 6% compound or is it on the principal?
It's on the principle. On the principle.
So any questions from our retailers? I mean, is there some way in which you could develop some agreement whereby Open provides the finances and you sell the goods, something like that?
Sure, especially when you do have maybe your clients that are already providing you with any items, and maybe you want them to scale up, or you don't want the risk of financing those clients, or we can chip in as financing partner there.
I guess my question is, it's what you're doing is not really the low-hanging fruit that banks like to do.
Of course.
You're working with the underserved, the risky, the remote, and I just wonder how your business model makes money, because there are a lot of costs involved in maybe selecting people to fund and then monitoring those people. It's wear and tear on vehicles. It's people time. I'm not quite sure how you do it.
Yeah, I think like I mentioned, maybe I can mention the issue of interest. For microfinancing, it's high risk, high return. I think that's why you hear me say our interest is 6% per month. If you to put it as an annual, I think it will be on the higher side as compared to the bank side. The bank side will be talking about maybe 15 to 20% per annum, which would be on the minimum. But as far as we are concerned, because of the risks that you highlighted, our interest is a little bit pricey, but I can confirm that as far as microfinancing is concerned, we are the best in the market, because the 6% is very reasonable for a microfinance. Some are not agree with me. I'm sure.
Do you work with the farmers, or you work with those farmers who have already made some farming activities?
Yeah, so we expect the farmers to have at least to have been doing the commercial part for at least three seasons. Yeah.
I recently the interest rate is stable the month.
We do give grace period for farmers. Yes, the interest will be interest per month, but when it comes to the payment itself, it will be aligned to the client's requirements. Because there's no way we can say a potato farmer, we need our funds after a month, because I think the farmer will harvest after 4 months. So we give the grace on both principal and interest for the first 4 months. But on the 50 or 60 month, depending on the client's needs, we will then request all the funds as a balloon payment.
I think if we take it over a year, the interest is very substantial. But many of these activities, they only last for a few months. so it becomes more affordable.
Yeah, sure.
Thank you so much. I think actually how big are you? The which training groups, how big are the groups that you are financing under the population scheme?
Okay, so for groups, we'll be expecting a maximum of 10 people in a group. But when it comes to training itself, we can train many groups at one go. So for group formation, we also help them when it comes to group formation, because we'll be requesting a group to have a chairperson, a treasurer, and a secretary, and at least 2 committee members. So it makes a minimum number of 5, but maximum of 10 for a group. But we also have exceptions where we have those who are under an irrigation scheme who would say, we have been working like this for long, and we don't want to be divided. So for those, even if they are 50 or 20, for the garlic that I mentioned, that we did last year, the group was of 50 people. Yeah.
Okay, thank you. I think I've got 2 questions. The first one is following up on the interest rates. I just wanted to know the other hidden costs besides the 6%, maybe the admin costs and some other costs that you do not reveal. Then the other question is on the financial literacy trainings. Do you also offer these trainings to those who do not want to borrow, or you only offer the trainings to those that want to borrow? Thank you.
Okay, thank you very much. The first one about the term that you use, the hidden costs. Yeah, so they call it. Yeah, we do have admin and insurance, but these are ones of them. They are paid upon disbursement. So for admin, it's 6.5%, and we also have credit insurance, credit life insurance, which is 0.6%. So credit life insurance, it only covers in the unfortunate event of the client. Yeah, so it means the total is like $7.10 per every 100.
From CIM.
Oh, so there's the other.
It was on financial literacy training.
Oh, for financial literacy training, even those who are not going to take funds from us, we do those financial. It's like corporate social responsibility for us, and we are also requested by the regulator to do so. Besides us, because Old Mutual has been doing this for long, but for now, I think most all the microfinance, they've been advised by the regulator to do so. Yeah.
Okay, from CIB, I'd like to approach you on the budget to next farmers interested from Atlas. Sure. At the start of your presentation, you mentioned that extending loans to farmers based on collateral.
Not based on collateral. Our loans, they are not collateral based, they are cash flow based. We look at it, like for tobacco farmers, we look at the past 3 seasons and what they are expecting for this particular season, and to be mostly guided by the off-taker, the contractors, which is Atlas in this case. So for those in particular, we don't even request the collateral, because most of them, they do bank with cabs, and they have a growers number, and their accounts, they are linked to those growers number. So definitely when they sell, their funds, they are going to come through those cabs accounts.
So my message is, it's good that you're also funding for major productive, but there's also need to fund the growers.
The what?
The free growers, they are productive.
So
what are you doing ensuring that maybe the free growers also get access to funds?
And that one, I can say, because of the risks risks are associated with those free growers. Like this season, we can confirm. I think when the floors were open, I think the prices were somehow low for those free growers. But for contract farming, the prices were better. So there is a lot of risk. And also, I can say for free growers, most of them, there is an issue of side marketing. And also, for free growers, I think in the long run, we are going to consider those who bank with caps. For those who bank with caps and they are able to provide for collateral, I think those are going to be assisted. I think even this season, we have some whom we have assisted that do bank with caps, and also they do have to provide collateral.
Thanks, Cornelius, and
You have to speak up.
thanks, Cornelius, and thanks for acknowledging our relationship. Yes, some marketing for you. We did have a great relationship with Omfin. I think what I liked most was number one, the interest rates. I can confirm that I showed around the market. I hope they are not. There are no other financial institutions, but they were the cheapest. But also they were flexible enough to listen to us. We wanted to introduce a dairy project in Mukumbura region 4. It's not an easy task to convince a financier to do that, and they did. And we gave our farmers a grace period of when we bought the heifers, the main cow, we got a grace period of 4 months. We had to negotiate beyond the 2 months that we had. So that's something that we liked about your model. I had hoped you were going to mention Omari, but this is one of the things that I hope you guys, Omfin and Omari, move together, especially for the unbanked. I don't like the caps, farmers going to caps because they are monthly charges of maintaining their accounts. But if we go the fintech route, we can get more smallholder farmers on board. Our farmers, of course, they are ahead in terms of repaying the loan, but we need to understand beyond the day what other sources of income are they getting, where are they getting the money? They are not only not getting money from dairy, but how do we understand how do we get to understand this? We need to involve them into the financial sector, and the easiest way is to get them on the Omari platform, and you guys get information, close the information asymmetry gap. So I hope moving forward, this is my dream. I've always pushed you guys that you need to move as a team. I think this is how we can achieve financial inclusion. Last forum with ZMX, imagine now farmers in Mukumbura opening a bank account to participate on ZMX, and they get income once a year. How about if they get on Omari, which doesn't have account management fee, they can now participate in commodities market. This is beyond you, but maybe to share with your guys, I think you need to move as a team. But thanks so much. It was more comment.
Thank you so much, Rodney. I thank you for mentioning that. And what we have done, like you had mentioned that for any amount below 2,000, we are dispersing those funds through Omari for those people who are in rural areas, because it's easy for them. It's easy when it comes to opening that Omari *707#. You already have your account. It's different from one visiting a bank. So we are deliberately doing something to make sure that especially those in rural areas, they do have their Omari, active Omari accounts, because we are dispersing their funds through those accounts.
Okay, we've got an online question from Fortunate at ZADT. He's asking for insurance. I note you indicated life insurance. Is there any scope for crop and or livestock production insurance, excluding tobacco and cotton?
Yeah, so for crop, yes, we have it through Omico, Old Mission Insurance. They do crop insurance. And for all our farmers, they do insure their crops through yes. Okay. Yes.
All right, thanks. Question from David and then from Minerva.
Thank you so much for your presentation. I struggle though to understand what's your model in your presentation, your slide on the market segmentation. You mentioned the subsistence smallholder farming. How does it work? Because you are talking all the time collateral. That for me, subsistence means that they, well, please explain. It would be great for you to explain how it works with the model, so, the subsistence farming. Thank you.
So for subsistence, we expect that the least potential that we have. We are talking of their goats. They can use goats as collateral. Of course, they cannot use things like chickens because that one, at least the next day the chicken is nowhere to be found. But we have goats, like livestock, goats we use as collateral, and also those from rural areas, they have Scotch cards. We use Scotch cards as the collateral. So for collateral part, it's just a pressure point. Especially we identify those things that we can confirm that this is where our client's heart is. Like I'm mentioning a Scotch card in rural areas, then they can say you cannot take my Scotch card. So once we identify that thing, we use that thing as collateral. So in most cases, their collateral, and in any case, we do not take these things. We just advise them not to sell or do anything to those assets up until they finish their loans. And I can confirm not one day we sold anything of a client, especially the projects. We have not really done so. We try to look for other means. And most of these, there will be groups where I mentioned that they will be co-guaranteeing each other. So these assets, they will be pledged into the group and not to hold each other. So we structured it in that way and in that sense, that they will be pledged this collateral to the group. And we just tell them, as the old mutual finance will be there to witness and to confirm that Elfas pledged this collateral to this group, that in the event of default, the group is going to sell the asset. So we are not involved mainly when it comes to the selling of anything, but the group is supposed to push, like the group collateral itself, co-guaranteeing each other. There will be pressure from the other group members. Because if one fails to pay, everyone is responsible for that obligation. And if you mention that we are going to blacklist you, the whole group for one member who haven't paid, then the group will make an action to make sure that one member paid. So in rural areas, that's why we encourage them to be in groups, not to borrow as an individual. Because in any case, as an individual, they will not be able to get what a guarantor. Because for a guarantor, we'll be expecting someone formally employed, maybe one of us in here. And most of us don't want to be guarantor. So they are not able to do that. So I can say for collateral, I'm not a major challenge because they will be trading those assets to the group. And if for any amount that they apply, the group is supposed to approve. Saying for Elifas, we are in the same group with Elifas. Elifas is applying 1,000. As a group, we are 1,001. We want Elifas to get 500. So we listen more the group's decision than the individual, because the group will be too guaranteed.
Thank you. Thank you very much, Peter. I'm just interested to know what is loan turnarounds.
Okay, yeah, for long turnaround, I can say it depends with the amount. Any amount below 1,500, once the client submits everything, which is needed, it's usually 3 days. But for any amount above 1.5, we talk of 5 to 7 working days. That is on the initial application. But for the subsequent loan that you might take after that, we will be talking of 3 working days as the turnaround is.
I think one more question and then we're gonna move on.
Yeah, a quick one, just a clarification on this grace period. So the grace period is a valid 2 months for this. Or this is depending on the kind of value chain. So anyway, that's one. The other one is you were talking about the issue on contracted farmers.
Yes.
If a farmer is contracted, already they are getting the interest. So these are loans which are more like consumption loans, or
Mostly it's bridging financing, where they need labor and buyout, especially for harvest. For tobacco farmers, it's an issue, a real issue. When it comes to labor itself, because they can do everything, but when it comes to harvest, that's where the challenge is in. And the contractors highlighted such as a big issue because the quality of their crop is being affected because of that.
and the grace period.
So for the grace period, I'm not sure where I mentioned 2 months, and everyone took it as the standard. For grace period, we do work with the client's specifics. Like if a client is doing, let's say a 3 month crop or a 4 month crop, client would advise that, will advise us, I will be able to get these funds after, say, 4 months. That's when I will be able to market and sell my crop. So on the 5th month, that's when I'll be able to what? To pay the balloon payment. So we'll give that client a grace period of 4 months. So it's not standard, it's like saying only 2 months, no. Because for some crops, it will not work.
So someone gets a loan, say $2,000 loan to pay for 86 months.
Yes.
When you say given a grace period, say I don't or 2 months or 3 months, during that grace period, that is going to be the interest is going to be paid on from that 3 months.
No, the interest is not going to be paid, but it's charged on those 3 months.
It's
Yes,
charged.
it's charged on the 3 months. But when it comes to payment itself, it will be paid after the 3 months. Yeah, sure.
No, just giving us no word.
Sure.
Financial interest.
I think we bring that to close. And yes, thank you very much. I just got one final observation. You know, our smallholder farmers, to me, I've always heard them as being perceived as a risky lot. But, you know, listening to you, it seems that they're not more risky than urban people. You know, these are individuals with different characters and different, you know, I think the risk might come down to how the financial institution does its homework. Because we're talking about people who don't know a lot about finance, and if someone wants to come along and give a loan, they would just say, yes, I want the loan, but they wouldn't think about the nitty-gritties, which could get them into trouble later.
Yeah.
So I'm sort of reviewing my thoughts of this being a high risk, and more that the homework needs to be done.
Yeah, that's why we do financial literacy training first before we do the facility, because most of them, if you are to just say we have loans, everyone will be saying, I need a loan. But after the financial literacy training, you will be left with the 5 people out of the 50. Because the reality will kick in.
Yeah, sure. Yeah, brilliant. So thanks very much for this. Okay, could we get from Minerva up? And whilst you're coming up, I'll tell everyone something about you. Kuzai Mngupwa is an agricultural insurance professional with over 6 years of experience designing and placing parametric insurance programs across Zambia, Malawi, Tanzania, and Botswana. He is part of a team at Minerva that has conceived and built Yielders. And this is Sub-Saharan Africa's first AI-enabled agricultural intelligence platforms. As a risk advisor at Minerva, Kuzai works at the intersection of satellite technology and agricultural finance to make African farmers visible, verifiable, and thankful. Did I get it right? All right, over to you.
Good afternoon, everyone. Good afternoon. Thank you for the wonderful introduction.
Thank you for the wonderful paragraphs that you sent me.
So, my name is Kuzai Mngupwa. I represent Yieldera, which is a platform built by Minerva Risk Advisors for agricultural intelligence across the African continent. In the next 30 minutes or so, I'm going to show you something that is already live, something that's already working, and already monitoring real farms across the region. So what I want you to leave with today is a clear understanding of what is now possible and why it matters for every person in this room, whether you grow crops, you finance them, or you depend on them. I will start from space.
Is there supposed to be some?
Yes, supposed to be.
Okay, sorry.
Sentinel, a satellite that represents the future of precision data. From its early launch and orbital deployment to the moment it sold.
It's too low. It's too low. It's too low. Yeah.
So what I was going to be showing you is one of the satellite constellations that we have integrated. So that was Sentinel-2, a satellite by the European Space Agency that orbits our planet and photographs every piece of land every 5 days for that particular constellation. So every 5 days, with a 10-meter resolution, every field, every farm, every season, whether someone is visited a farm or not, Yieldera was built on that. This is part of our eyes on the ground. Now, this is the problem that we built Yieldera to solve. 3 groups carry the weight of agricultural risk in this region. On one end, we have got insurers. These deal with manual claims widespread fraud, and weeks of delay before making settlements. On the other hand, we have got banks and financial institutions that face agricultural loan defaults that can reach up to 30% because in most of the times, they are lending into a portfolio they cannot see. And then on the other hand, we have got farmers who carry 100% risk of climate exposure with no tools to prove what happened on their land and no protection when things go wrong. So these are not isolated problems. They are interconnected. They all come from the same source, and that is nobody can see what's happening at every field, on every farm, in real time. And Yieldera is here to change that. So this is what a bank or a contractor sees the moment they log into the system. Every field that is linked to your institution is mapped. It is GPS verified. It is color coded by crop type and by region. Not a spreadsheet, not a file of contracts, but a live and real-time map. So you can see at a glance where your exposure is concentrated, which provinces carry the most weight, which crop types are dominating your book. And you can click in a live system, you can click on any of those polygons and you open field level records immediately. This is your portfolio being made visible. If you switch to the table view, it's the same portfolio, but now it's becoming a structured summary. So you know your total fields, your total acreage, the breakdown of your portfolio by province, by district, and by crop type. For a bank's agricultural desk, this is your lending book. This is your lending book in one screen. For a contractor managing outgrowers, this is your supply network summary. And this dashboard updates in real time every time a new field is added. And when the crop status on those fields changes. Now let's go deeper into what is happening inside of those fields. So what we're looking at here is a product of the satellite imagery of a real farmland. The green areas there represent the healthy part of the field where there is an actively growing crop. And on the other side, we can see that it's either there is stress beginning to set in or there is senescence happening there. This is the NDVI, Normalized Difference Vegetation Index. It is a direct measurement of how much photosynthetic activity is happening within the field, again, derived from a satellite's infrared sensors. A healthy mid-season maize crop is in the range of 0.6 to 0.8. And then when you see that number beginning to drop, when you begin to see yellow and brown over that satellite image, you have an early warning signal. Weeks before physical sign appears on the ground, you as a banker or contractor from the comfort of the office, you already have an appreciation of what's obtained over that particular field. This is the value. You see this before it becomes a problem. Now, behind every field is a registered farm, not a name on a contract. A verified digital record linked to their GPS mapped land with a full summary of how many fields they manage, the total area, their location, and their various crop types. For a bank, this is your borrower database tied to the actual collateral. For a contractor, this is your outgrower register with field evidence attached. For a cooperative, this is your membership register linked to real cropland. And unlike a paper register, this cannot be lost, this cannot be duplicated or disputed. So what you're seeing here is a field boundary being drawn directly on a satellite-based map. A field officer or any user of this system opens the platform, they trace the boundary of the farm, and the GPS polygon is built. The area is calculated, and this is happening automatically. The record is stored permanently, georeferenced, and time-stamped, linked to a farm and linked to an institution. This mapping process can also be done from our offline-first mobile application, enabling farmers in environments where there is no internet access or internet connection to simply walk around the field and capturing GPS points. The data is then stored locally within their devices, and then as soon as they get internet access, this data automatically syncs into our cloud database. And you, from the comfort of the office, are able to monitor those particular fields. So fields are registered in a manner that cannot be disputed. These boundaries are permanent. The area is verified. The location is on record. That is the foundation of everything that I'm about to show you. So this is the question that every bank or every contractor needs answered, right? Right at the beginning of the season. Did this farm actually plant? We have got this module. So what you are looking at here is basically a normalized difference vegetation index and DVI time series chart. Green. The flat line or the line below the 0.2 threshold represents bare soil. Nothing is growing there. The moment that red line is breached, it's a signal that there is crop establishment. The artificial intelligence summary over there tells you exactly what is found within that chart in plain natural language. Estimated planting date, the crop establishment status, and any anomalies in the emergency pattern. Again, for a bank, this is your loan utilization confirmation. The money went into the ground in this case. For a contractor, this is your early season delivery confidence check. And then for a farmer, this is proof. Satellite verified timestamp that indeed you went and did the work. So this particular field is currently at 63% growth completion. Its water score is 67 out of 100. That score is called the Water Requirement Satisfaction Index. It measures at the field level how much of the crop's water needs have been met by rainfall at each crop stage. A score of 100 in this case means perfect. Below 60 means that we are in the stress territory. At 67%, this field is currently under mild to moderate stress. It's still recoverable if good rains arrive now. But if the score continues falling, a bank or a financier needs to consider what that means for the seasonal loan. A contractor needs to consider again what this grower can deliver at the end of the season. Ladies and gentlemen, that's not a forecast. This is a measurement updated continuously in real time and based on the actual rainfall and the crop's actual growth stage water requirements. So you know what's happening right now from the comfort of your office. So that was July 2025. This particular field recorded 4 frost events. What you're looking at there on that chart is a draw source temperature chart. The 2 lines are 2 completely independent satellite derived data sources. The one in blue is NASA, and the one in green is OpenMetric. Neither knows what the other said. Our system queries these 2 different weather service providers separately, and then we compare the results on this dashboard. On 4 days in July 2025, both sources independently recorded 4 days when the temperature went below the 5-degree set threshold. That is consensus. That is objective, defensible evidence that frost really occurred on those specific days and in that specific location. Remember, this is happening at the field level. So if a farmer comes to a contractor or a bank saying a frost event damaged my field or my crop, this is your verification tool. The dispute is settled by data, not by an argument. Now let's zoom back from individual fields to the entire region. This screenshot I took of the system initializing a regional climate analysis. So in the background, the system queries decades of satellite rainfall and soil moisture data, comparing the current season or a given period against the historical average, and then computing the anomalies that are occurring at the district level, at the province level, and at the national level. This process takes about a minute, down from 3 to 5 hours in traditional GIS tools. Then it produces what you're about to see. So this is Zimbabwe from 1 October to 15 November 2025. The map shows rainfall distribution. The colors over the map immediately tell you where the conditions are normal and where they are not. This is a financier's view where is the concentration of risk in my loan book? Is my total and central on track? Or is there a pattern emerging that should change the lending decisions that we're about to make? It is also the view that you as a contractor needs to plan procurement. And if you're a farmers association, it is the evidence again that you take to the government or financial institutions and say, this is what is happening in our region this season. Regional intelligence on demand for any period and for any geography. Now, you cannot be watching over 500 fields all in real time. So the Yieldera system does that for you. So you set the rules. An example is when the minimum temperature on this particular field drops below, for example, 2 degrees Celsius, please alert me. Another example is if the 7-day cumulative rainfall falls below 15 millimeters, please alert me. Right? The moment any field under your portfolio crosses that predefined condition, the system sends you alerts by way of email, by way of SMS. This happens automatically the moment that particular breach happens. Again, for you as a bank, this is your trigger to call your borrower even before the loan goes bad. This is your signal to reassess and deliver a commitment. And for a farm, this is early warning that gives you time to act. This is Scout, our built-in artificial intelligence agent. You simply type a question or you speak to it. Which of my outgrowers, for example, are showing water stress this week? Did field CP1 receive enough water in October 2025? Give me a summary of all my fields with declining crop yield. So what the agent does in the background is it pulls live data and responds to you in plain language, the way you interact with tools like ChatGPT, etc. So you don't necessarily need to be a GIS expert to use this system. You ask questions and then it does the work for you and gives you answers. What you're seeing behind that artificial intelligence chat is our claims module, meant for our insurance partners. You assign claims from this dashboard. The assessor receives notifications on their mobile application that works without internet. The way they conduct the assessment within the field is all predetermined within the application. So they are not using their own ideas or methodologies. Everything is standardized as per the international crop assessment standards. The reports come in as soon as the assessor gets internet access. They are time-stamped and they are GPS stamped. So as I conclude, ladies and gentlemen, for the banks in this room, I want to be direct and say some of you are currently making agricultural lending decisions with almost no verified data. The farmer tells you they planted, you take them on board, the crop fails, or they don't plant, and you only find out when the loan defaults. Yieldera gives you 4 things. First one is planting confirmation. Satellite verified evidence that the loan went into the ground. Number two, it gives you continuous monitoring of your whole portfolio. The health of all the fields is tracked all season, not just at the disbursement stage of the loan. Number three, early warning. Water stress signals are visible within the system weeks before crop failure. Time to act, time to call the farmer, time to restructure if needed. And fourth, an evidence trail. Timestamped, GPS linked, field records behind each and every lending decision that you make. This is not about agricultural insurance. This is agricultural intelligence. And it protects your home. For the contractors, the proposition is equally the same. You are managing a supply chain that is invisible to you until the delivery day. We have no way of knowing mid-season whether your contracted growers are on track. You plan procurement on the basis of optimism. The system changes that in three ways. Number one, you can see how every outgrower's crop is performing all season without the need to visit every single field. Number two, you can adjust your procurement focus on the basis of real crop data, not estimates. And number three, you can verify the contracted area that was actually planted before your commitments are locked in. And finally, your supply chain becomes predictable. Your relationship with your growers is now data-backed. And when something goes wrong, you know early enough to do something about it. So there you have it, ladies and gentlemen. Minimum viability for agricultural risk. That is what we call a baseline that every farmer, every banker, every contractor in this region now deserves. A verified field, a confirmed planting date, a monitored crop, and an objective weather record. An early warning when things go wrong, not luxury, but the minimum standard of truth. I think.
Very polished presentation. Are there any questions for Kazai? Yes.
So it's not a question. Sorry, it's not a question. I just wanted to add the fact that for the loss assessments, the module is geo-fenced. So the assessor cannot do an assessment before it's actually on the close to the field. I think it's not good.
So you just answered one of my questions on the ground truth thing. But I think to confirm that, I mean, what is the resolution of the satellites that you were using? Are you at 9x9, 3x3, 1x1? What's the finest resolution of Yieldera? Your NDVI, how accurate is it? Because, so I asked for the resolution, but I'm also asking, how is it able to distinguish if I've done intercropping? I know you've talked about the ranges, but if your resolution isn't as high, how does it do it? And I know NDVI has the problem that you have talked about ground truth and all that. And then I wanted to say, so with Yieldera, it's primarily for the bank and the contractor, and the farmer doesn't get the app? Or does the farmer also have access to it?
Question. Thank you for those questions. I'll start with the resolution. So the approach that we've taken is Minerva Risk Advisors is multi-tiered in terms of the satellite service providers that we work with. So you'd see that at the 10-meter resolution, this is for your continuous portfolio. Right, we get imagery every 5 days. But then the moment we detect that something's wrong over this particular field, surely at a 10 by 10 meter resolution, it's difficult for us to pinpoint the actual issues happening on the ground. So we've partnered with Planet. We get the Planet scope at 3.7 meter resolution. And then if we miss at the 3.7 meter resolution, we then go to the final tier, which gives us the images at a 50 centimeter resolution. So that eliminates that drawback of a wider spatial resolution when it comes to crop monitoring. Then when it comes to access to the system, assuming it's kids financing a farm. So you see, when you are registering the farmer or the grower within the system, as you are filling the form with farmer details, there's a section that asks you to say, do you wish to grant this farm access to the system? So it's an option, either tick or you leave it as it is, depending on the relationship or the agreement that you have with the farmer. If you tick and you submit, as the farmer record is being added to the database, an email goes to the email address of the farmer, notifying them that your field is now part of what KEBS is monitoring using the Yieldera system. But then you see in terms of access control, what I can see as KEBS is different from what the farmer sees. So we have implemented robust role-based access control within the system. I don't know if I've answered.
So what's the cost to the bank? Because if you're going to go further down, the more finer the resolution, the more expensive it is that you're getting it from this. So I think I would like to know. So if I paid something, then you're telling me, oh, but we have to have gone a little bit down. There must be a cost there. How do you do the costing?
Yeah, maybe I'll let Mr. Childo take that question.
Okay, so if you are a bank and your farmers are not on the scheme with Minerva, you're just standing as a private entity, the cost is $1.50 and it's fixed. Whether we are going to use planning for the image, it will be fixed at that. So it's discounted if you are a client of the or the dollar bill. Thank you so much. If you satellite monitoring, that's your system, because most of the crops, the parameters that you talk about, the frost, the rainfall, what about the diseases or the hailstorms? And the total crop is hit by hailstorm. Will the system be able to detect that? And you talked about the banks and the contractors monitoring whether the fields are planted, the low utilization. Are you monitoring the application of the fertilizers, the application of the chemicals? Because I can patent where I said I was going to use 6 tons per liter, I will use 2 tons per hectare. Does the system record the use of the inputs? Because that's where the banks are saying, well, I gave you money to buy the inputs. And you could use the diesel to prepare the land and the plow without fertilizer, without chemicals.
You're not a very trusting person, are you?
Thank you for that wonderful question. So I will start with the final part of your question, right? So we use Yieldera as a risk management tool or as the first line of defense, right? Say, okay, fine. I don't have to visit each and every field to have an understanding of crop health, right? But then using this system, without visiting those fields, I am able to see if there are any fields that are problematic, right? So you see that the biomass within this particular field or within this section of the field is terrible, right? You use the 10-meter resolution, you go down to 3 meters, you go down to 50 centimeters, right? You are convinced. It's your responsibility to then dispatch someone to go and look into it. So we are not replacing ground truth, but we are saving new time, saving new cost on dispatching resources, physical resources on each and every one of these fields. Then the first part of the question was, are we able to see if there was a hail strike or a frost incident? Definitely, we can see if there's a patch where the leaves are damaged. Definitely, the satellite can pick that using the various vegetation health indices that we've implemented. So apart from the normalized difference vegetation index, maybe for your comfort, you would want to appreciate that we've also incorporated 5 other different indices. We've got the enhanced vegetation index, we've got the soil adjusted vegetation index, we have got the water normalized difference vegetation, normalized difference water index. So each and every one of these is looking at very specific parameters within a given field. For example, we have got one that focuses only on the soil moisture within that field, whilst the NDVI and the EVIs are looking at the biomass. We have got something that is looking specifically at flooding, for example. But we've also gone to a step further by incorporating another constellation again by the European Space Agency, the first constellation, which is the Sentinel-1. Under conditions where we've got constant cloud cover over the period, right? They've got a radar. So this is not an optical satellite, but it's a radar-based satellite with a cloud penetrating feature. So even though we've got tweaks over a region, if you ask the system to say, do we still have water in this game? I mentioned water because it's one of the easiest to pick when you use a radar. We have incorporated that as well.
Yeah, so say you've got a new farmer, someone new to our program. Can this team look back in time to give you a baseline? How do you establish a baseline, for example? You might have only farmed half of it, for example, after 2 years. Now he's using old pivots. Can you go back in time and identify what yields were past? And yeah, can you establish? I mean, it all presumably also starts with what's the soil based on? What's underneath? Something surface. Do you have tools that can establish the expect the soil to be on?
Tony, I think Kudzai wants to go back to a slide on the presentation. So shall we swap? And I'll come with you the mic.
That one. Right, so the first part of the question was, are we able to customize the period that we're interested in monitoring that particular farm? The short answer is yes. So we are not limited only to the current satellite imagery. The system pulls images even from 3 years back. So you define a custom date range or from, I'm monitoring this field from, in this case, 1 June 2025, 30 June, right? And this image was from the 9th of June. So we've got meta date for every image that we can present here. So definitely you can sort of rewind and look at specific periods where you want to establish whether there was a crop on that field. Did the farmer plant? We have got actually one interesting case where working with one of the insurance companies, we noted a number of issues over the field, right? In person when we conducted the physical visit. And then when we went to the office, we simply mapped that field. And then we revisited that to last year, same period last year. And we then discovered there was not even a center pivot on that. So it was a fairly new piece of land, hence the problems that we have. We managed to then pick that using this, this satellite imagery. So yes, we can revisit any period of time to establish whether there was a crop or not. It doesn't take a lot of time. If I was presenting a live system, it's under 15 seconds to pull an image for every location. Under 15 seconds.
Thanks, Lizzie. I've actually got a question on this slide, and then I have another one for cloud coverage. How do you deal with polygon management? So here we can see there's a definite split cropping. So my first question would be on your polygon management season to season. And then if we take a season like this season where we've had high cloud cover, I think our analysis really picks us being quite low through the season. So how would we address the cloud cover issue? Thank you.
So when it comes to polygon management, at the moment, so I'll start from the creation of these polygons, right? So we give you as an entity access to the system. You do the mapping, you know where these farmers are. Sometimes you give you the GPS coordinates, or alternatively, remember I mentioned that we have got an offline mobile application which you can give to the farmers. They do the mapping themselves and you simply look at the fields from the system, right? At the moment, we keep the fields under your entity. So there's clear separation of concerns, right? If I'm KEBS and then Mr. Chirindo is Minerva. Minerva, we have access to the fields that belong to the farmers that work with Minerva, and KEBS we have, so there's no cross-sharing of data or information within the system. When the season lapses, the fields remain active. So as long as you still have the farmer, the record is kept permanently within the system until we make a decision to then delete. That's when we then get rid of the record. And then when it comes to cloud cover, I think I also mentioned the issue to do with Sentinel-1, which is a radar system. We have integrated that in our system. But like I mentioned, it's a module that you, as the administrator or the developer of the application, you have to invest in the work to refine, because what radar images do is they give us what's known as backscatter. So when you look at a raw radar image, you cannot separate between where there's a crop and where there's a lot of noise that comes from radar. It's easy to distinguish between where there's water or where there's a stream or a river, but then when it comes to crops, it's a bit difficult. What we are doing, we are refining our model, and we are closing in on actually having clearer images as good as what we are seeing here from an optical satellite, but coming in from a radar system.
Thank you very much. I want to ask you something from the perspective of the farm, not the bank, not the firm. In this technology, I think we should develop it. What a farmer wants what is it that I'm going to be able to do after an observation has been made? What can I do in the next 3-5 days to prevent a situation that may not be favorable to the performance of my project? We have 4 army worms, which is detected, and I need to do something. So I'm looking at it from the perspective of the farmer in terms of managing. This is the precision information which will then assist the farmer to make decisions in time.
Right, so this is a modular system, and part of the modules that we have already, we have incorporated the element of agronomic advice, right? So, for example, when you look at this particular field, this does not make sense, right? This is not useful. Okay. I can see that the farmer planted in this one section of the field that was green and the other one was drying out, right? So what? Is the question, right? So within the same module, we have got a feature for one to generate an advanced agronomic report, right? So you can do it as an if you are at the field level, as a banker at the field level, or as a farmer, right? So what it says is a typical report to come and say, remember I mentioned those 5 indices, right? It will say your NVVI is this much, your EVI is this much, right? What does this mean for this particular field? And what are you supposed to do? So we have got those agronomic advices in part of the modules, but they are isolated by the nature of the system that is modular. So you get advice on the basis of the biomass or the crop health in general. But then when you use the water requirement satisfaction index again, it gives you a detailed report to say, you know what, the crop is at 63% growth stage, right? And it has received 67%. What does it mean from an agronomic perspective? What are you supposed to do? It's also built in within that particular module. I don't know if Ms. Chindo would like to add.
Yeah, maybe what I can just add is, as a farmer, right, you know the operations of the husband that is required for the crop. And what this system basically doing is to aid you in monitoring the health of the crop. So for example, you have a pivot, maybe it's 50 hectares, but it has different soil types on the field, right? And obviously with different soil types comes different fertilizer requirements, depending on the nutrient status of those soils, the different soils. So in one, say a quarter of the field is sandy soil, then the rest of the field is the clay soils. From the satellite image, you'll see that this portion is depressed. The 25% is depressed. Your planters, probably the way you calibrated your planters is such that it was applying a certain rate of basal fertilizer all across the field. So obviously, where the soil is sandy, there will be a higher demand for nutrients on that section. And after a couple of weeks, maybe 3-4 weeks down the line, you are seeing that portion is depressed on the satellite image. Then you need them to go on the ground, isn't it? Why is this section so? And then if you are an experienced farmer, you then know I need to supplement here because of the condition of the soil. The system is not going to give you how much fertilizer you need to apply and so on. It will just show that this portion is affected, but your ground trooping will then show you that this portion requires fertilizer. This pest requires this particular chemical to control and things like that. You then need to consult your input providers or your agronomist to have more detailed information on the remedies.
We have more questions. If not, thank you for a very polished presentation. I think that brings us to the end of today's meeting. Thank you very much, everyone, for your attendance and to those online as well. Next month, April, we'll be having the SDC funded Markets and Seed Access Program. They've just entered phase 2, and they'll be talking about their successes and failures in phase 1 and their outlook plans for phase 2. I'm also hoping to get the Data Protection Agency to come in and tell us a little bit about this new legislation around data. I think many of our member organizations collect data routinely on farmers and perhaps would like to learn a little bit more about the requirements that have now come in. So we'll get them to come in and educate us on that. So I think, thank you, everybody, once again. Have a good rest of the day, and we'll see you next month.